What is covered call strategy? When to use covered call strategy for profitable trading? Hi, I'm CA Rudramurthy, author, trader, trainer, and a chartered accountant coming live from Bangalore. And I have only one mission, that is to assist all committed traders like you to become multimillionaires in life. Let me now tell you when to use covered call strategy for profitable trading, and one has to clearly know how to implement this strategy for regular income. Let me just give with this clear example and strategy called cover call. Now one has to get a clear understanding that every strategy in option requires an market overview. No strategy will work all the time, but one has to clearly understand based on what you expect market to do, you have to take the right strategy. I'll be covering a series of option strategy in your channel Rudraology, absolutely free to educate and ensure you people earn money through trading. Let me now share to you the covered call strategy. First of all, let us try to understand what is a covered call strategy, and later we will learn when to use covered call for profitable trading. Now in a covered call strategy, you will have already a buy stock position, or you would have bought the stock in equity market, and for that we sell a higher strike price call option. So buy equity plus sell a call option of higher strike price. Now the same strategy, what we call here as covered call, can be done even by buying it in futures rather than buying it in equity market, and for that you sell a call option of higher strike price. So even the same covered call strategy, instead of buying it in equity market, you can even buy it in futures market, and to that sell a call option of higher strike price, which we call as OTM, or out of the money call option. I will also be doing a series of option market basic videos also, so that you understand option markets much better, and do follow all the latest updates on my Twitter handle, I am Rudramurthy, and also on your YouTube channel Rudraology. Now let me take a live example. Currently, if you want to buy Reliance Industry, which is available to you for 1930 rupees, you either buy Reliance in equity market, or you can also buy Reliance Industry in futures. So if you buy Reliance Industry for 1930 rupees, now you have to sell a call option which is at a higher strike price than the price at which you bought Reliance Industry. So for example, because I bought here Reliance Industry at 1930 rupees, I am selling a call option of a higher strike price, which is at 2100 rupees. And when you sell a call option, you will pocket the premium. You will receive the premium. In this case, 20 rupees is the premium. I'm giving another example because we can do covered call even on index. You can do it on Nifty, you can do it on Bank Nifty also. So take this example. Today I will buy Nifty futures at 14,500, and I will make a covered call by selling a higher strike price call option. In this example, I'm selling a 15,500 call option. Example here, it is about 10% away from the price where I'm buying. So I'm currently buying Nifty at 14,500. A 10% away from current strike price would have been 15,500, or in simple example, it is about 1,000 points away from current price on Nifty, and I can pocket or receive a premium of 15 rupees on the call option what I'm selling at 15,500. So very simple, let me summarize. Covered call means buy a stock and sell a call option of higher strike price. Generally about 10% away from current market price will be a very good idea, and try to take monthly option and do this strategy at the beginning of the month itself. so that you get benefit of the premium what you are receiving, and time decay will always help you to make more money. Now, very important is to know when to do covered call. Very, very important. When should I do this strategy? Answer is very simple. When you are mildly bullish on the stock, that means you expect stock to go up, but not drastically or hugely up. You are not aggressively bullish. You are mildly bullish. So for example, in this case where we bought Reliance Industry at 1930. I expect Reliance Industry to go up, but not above 2100 for the current month for which I am selling the call option. So if you expect Reliance Industry to go up, but not above the strike price, that is how you are selecting the strike price at 2100, because I don't expect Reliance Industry to go above 2100, and I can devise this strategy to make big money. Similarly, Nifty future, I'm buying at 14,500, but this month I don't expect Nifty to go above 15,500. So I'm mildly bullish on the underlying asset, whether it is Reliance or Nifty future or any other stock or any other index, as per the example what I have given. And you will make highest money if market closes somewhere closer or exactly at your strike price of the call option what you have sold. So you have to select the strike price in such a way that the stock or index does not go above the strike price. So here I don't expect Reliance Industry this month, for which I'm selling the call option, to go above 2100, or Nifty example, I don't expect it to go above 15,500. That is the reason why I have selected the strike price as 2100 for Reliance and 15,500 for Nifty, which is approximately 10% away from the current price at which I am buying it, and use this to earn an additional income on the long-term holdings what you have even in your portfolio. So there are so many people here who might be having a equity portfolio for long term. You will be a long-term investor. You have very good stocks in your portfolio, but you want to make regular additional income. And that too, how do you do this? Is through covered call strategy. So continue holding the shares what you have in your long-term portfolio and generate an additional income on your long-term portfolio by using the covered call strategy. So the biggest advantage of covered call strategy is it will give you an additional income on your existing long-term portfolio, rather than simply keeping quiet and holding the stocks what you have. No doubt you are bullish on the stock. That's the reason why you have it in your equity portfolio, but generate an additional income by selling a call option of higher strike price. And even by chance, if market goes heavily bullish and if the stock rises hugely, no problem. The call option what you have sold, for that you can give delivery of your equity stock and you can still make income. But the only drawback of this strategy is, by chance if market falls heavily down, then in that case, no problem, you will make additional income on the covered call what you have sold, because if market does not go above the strike price of the call option what you have sold, the entire premium what you have received is yours. And if the stock comes down, you are able to hold the stock because it's a blue chip stock. It is only the stock which you want to buy for long term. On that stock, if I do a covered call, it will be a great advantage, because even if it falls hugely down, you want to take delivery, you have taken delivery, or you want to hold that stock for a long term. If you have futures long position, then in that case, you should have additional margin to hold the stock and roll it over every month. So use this strategy for your long-term equity holding to generate additional source of income. And even if market goes closer to your strike price or nearby to your strike price, the entire premium what you receive is an additional monthly source of income to you. However, if by chance market falls drastically down, then you can still hold to the delivery or roll over the positions in future and use this only on blue chip shares and the stocks for which you want to hold for long term. And this input is coming to you because of your channel Rudraology, and I want each one of you to subscribe for this channel. Hit the bell icon right now so that any latest video updates you get it straight onto you as a notification, and join hands with me to spread the right financial literacy everywhere. And I want each one of you to make money in trading. For more information on stock market training programs, to open demat and trading account, and for live market updates, see the information given in the description below. Happy and profitable trading. Signing off, Rudramurthy, and I want each one of you to earn huge money, and that is possible only through right learning. Take care. Thank you.